Hello traders and welcome to the video. In this video I'm going to show you how to use the shark wave pattern. This can be either a bullish or bearish wave pattern and you can catch big moves such as this move that we see going on here on the UJ 30-minute chart. I'm using an indicator which automatically detects these shark wave patterns for you. You can usually find an indicator depending on the platform that you're using. Here I'm using the MT4 trading platform, but whether you're using CTrader, TradingView, or any other platform, MT5, you can find an indicator that will help you to detect these bullish and bearish harmonic shark patterns. Okay, so first of all, we're going to look at a bullish example. As you can see, this is in play now. The indicator has confirmed this, that we're in a bullish A-shark pattern. Here we had the higher lows in the uptrend, we had the higher highs, and we had the pullback below the low, this red area here. And this is where we would have looked to have entered this trade based on the bullish shark pattern. As you can see, it was confirmed with a spinning top candlestick pattern, also a hammer candlestick pattern here. We had this big up bar, which would have been a good place to enter this trade around here somewhere. Alternatively, you could have waited for a break of this resistance level and entered it somewhere around here. You can see this resistance has now become, I'll just mark that for you. This resistance level is now being support, it's holding up as support, price bounced off here and back up. But this red box here is where if you're just going to take the bullish shark pattern as is, you could have looked to have placed a trade around here and to get in on this trend. As you can see, it's quite a good trend. We would have been up around 50 pips or so. Price is starting to show signs of a reversal, but you would have locked your trade in at least break even. If not, you could have perhaps moved your stop loss to around this level somewhere. But either way, it'd be interesting to see how this plays out. The shark pattern is based on Fibonacci levels. If you're not quite sure what these are and how they apply to trading, please see some of my other videos where this has been covered. In a nutshell, they are quite reliable levels for analyzing the price action and patterns, and you can find the shark pattern without using any indicator. As I said, in this instance, for the bullish shark pattern, you're just looking for higher lows, higher highs, and then a pullback below the low. And then you can, just time your entry, either take the pattern as is or use candlestick patterns and support and resistance levels. You can also confirm with other indicators. If, for example, we put the stochastic oscillator on the chart here, you can see the stochastic had a pullback and a crossover near the oversold area, which is 20 and below. So any crossover to the upwards direction in or around this 20 level suggests that the market is oversold and it is turning back upwards, which would have confirmed this particular entry here based on the bullish shark pattern. Okay. So that's an example of a bullish shark pattern. You can spot them on any trading instrument, any chart time frame. I do find the higher chart time frames tend to be more reliable, primarily because they contain more price data. It also means less time chart watching. Here is another example of a bullish shark pattern, this time on the guppy, the pound yen 1 hour chart. As you can see, same principles. We're looking for the higher high, higher lows, and then the pullback below the low, which would have been around here. As you can see, had you entered, you have a spinning top / pin bar candlestick there to confirm the entry. But had you taken this trade, price did shoot up, the trend did continue, and you would have had an opportunity of around 50 pips so far. Stop loss could have been around this area. We'd currently be up 20 pips or so and just waiting to see how this plays out. If you feel like it looks kind of complicated with all these numbers here and the Fibonacci ratios, it's basically what these are displaying. You don't necessarily need to know how or why the levels are are plotted as they are. You can just trade it based on what the indicator is telling you. However, I would also be doing my own price action analysis and using any other technical indicators to confirm the entry. And obviously, as always, have sensible money management to lock in trades at least break even, if not lock it in with some profit and perhaps close out some of the position as price moves in your favor. Okay, here's an example of a bearish shark harmonic pattern, this time on the CAD franc 4-hour chart. The indicator has again done a good job of picking out this harmonic pattern for us. In the case of the bearish shark pattern, we are looking for consecutive lower lows and lower highs, then with a pullback above the previous lower high. As I said, if that all sounds a bit complicated and the lines just look like a load of gibberish to you, it doesn't matter. You can simply use an indicator that will plot these levels for you. However, I do think it is worth reading up. I have a few articles that I've done on harmonic patterns, including the bearish shark and the bullish shark pattern. So it's good to know why the levels are plotted as they are. Like I said, they're based on Fibonacci levels. I've also done some articles and videos on those. So please educate yourself before using any particular trading strategy. Okay, that being said, this harmonic bearish shark pattern is in play. We had the pullback here above the high. That would have been the entry based on the textbook trade, the shark pattern, and you can see price has since fallen around 60 pips. Again, another good trade. This is perhaps not one of my preferred currency pairs. There's a shortage of shark patterns, bearish shark patterns at the moment in the markets. However, this would have been a valid entry point. Currently we would have either exited for a profit there or have exited part of the position and locked in our stop loss to prevent the trade going into a loss, perhaps just below this support level here somewhere. We would still have some more pips to bank. And if price did continue down, there'd be more potential in this move. That being said, there is a strong level of support here, which was tested and held up, and prices continued upwards, as we see with this bullish candlestick action. Bulls are really pushing the market up. So that's an example of a bearish shark pattern. As I said, make sure you've got sensible money management in place. I like to ensure that my stop loss is as tight as possible with a favorable risk to reward ratio of at least 1-3. That meaning that one winning trade is at least 3 times the size of a losing trade. This means that one losing trade is not going to wipe out all my gains. I also prefer to look for such patterns on the higher chart timeframes, as I find they tend to be more reliable due to the fact that there's more price action taken into consideration. It also means less time watching the charts. But yeah, in a nutshell, that is the bullish and bearish shark pattern, which is basically a combination of harmonic impulse waves using Fibonacci retracements. Thank you for watching. Catch you on the next one.